Welcome back to the Eric Krown crypto channel, coming at you from a completely different angle on this macro Sunday for a very exciting day as we essentially look at all of the ideas that we've been exploring over the past couple, it's really like the past month now, slowly evolving and now coming to fruition. And I really do expect things to get a lot more interesting over these next couple weeks into the end of July. Other than that, I wanted to follow up on the short-term time frame analysis as well. And then also very quickly point out these polls that we've actually been having on the Krown Chain application, which anyone can let their opinions be known. But for right now, will this week close green or red? It looks like the community pretty fucking good actually, with 68.6% calling green for the week. That obviously ends today, and so far so good it does look like. What you can also be interested in is perhaps the Bitcoin monthly closure, red or green, and it does look like for right now red is actually winning on that particular tab. Anyways, with that said, let's just jump right into it. Start off with the short-term timeframes here first. So yesterday I was looking for a bit of a short-term timeframe pullback, but the key was any sort of short-term timeframe pullback that fails to violate 20,100, just another higher low and likely does lead for another try higher. I was saying probably into this next week of trading. Looks like Bitcoin's going to do it over the weekend, so fair enough is fair enough in this case. And ultimately just a game of ranges on the short-term timeframes. Bitcoin does go from one range high to the next. And yes, I am looking for this one to continue up a little bit more, perhaps up to the daily range highs here. Anywhere between about 22,000 to 22,500-ish region is good enough for this next week. And that really does put Bitcoin in a position of power. But over here on the short-term timeframes, as I should denote, we do see that 4-hour BBWP. It's expanding off of the lows, so this move does still have a bit more juice in it, if you will. 4-hour Jewel still showing upside as well, and we got 4-hour. I didn't call this one out yesterday. I guess this was yesterday. It must have been right after recorded actually. Hit a little bit of hidden bullish evidence on that last higher low, which is good. So ultimately, I would still be saying the same thing as before actually. As long as Bitcoin is above about 20,000, you could even go 20,400 now instead of 20,100. I do look at this as just another higher low and likely to try higher in the short and medium term. Below 20,400, and then yes, I do look for Bitcoin to spike somewhere down around our last lows that we did see in 14th and 13th of July, but I would really want to come back to things after that and reanalysize it. Other than that, I wanted to point out a couple of very important things that are happening here on the higher term timeframes that we've been following up for the past 72 hours, and that's going to start off with the daily stochastic momentum oscillator, of which the criteria needed for it to cross the upside from yesterday was met. Bitcoin did close above, I think it was like 20,400, which was the pivot point, and now will be remaining with upside posture as long as Bitcoin is closing above 19,750, which is obviously good. And with CME opening up a little bit later today, it's going to also have a chance to open up with upside momentum as long as if Bitcoin could close above 21,700. So I would go as far to say that if you are looking for the next leg up, if the daily closes above that region, probably going to see a move somewhere around the daily range highs, which is about 22,500 if that condition is met. So that'd be kind of like the next, I guess, thing that I'd be looking for. Obviously, rejection here though would still be kind of playing out the same this same resistance that we have been going back from April to the June highs, and then perhaps once again right here. But ultimately, I do think that Bitcoin is in a general good position to try for higher over the next couple of weeks. Doesn't necessarily mean that it's going to be like today or tomorrow, but ultimately we're going to discuss on the higher term timeframes actually in just a second here. Why that is. So let's go back on over here and let's do the last thing for the short-term timeframes. This is something that we spoke about or we identified. I mean, we've identified it for a long time now, but it's just slowly kind of evolving here. And if I did have to put one formation on this, one formation to rule them all, if you will, that would be an ascending triangle. I very rarely call out formations because I just don't think that they, work, or it's not that they don't work. It's just that they're too ambiguous to really make a living off of in my experience. Of course, it can be done. I do know a few pattern traders, but few and far between, and kind of in my opinion, a little bit more of a difficult way to make money. In this case, though, ascending and descending triangles, I do find to have a pretty damn good hit rate out of all the patterns. I think that they're the best. And in this case, we do have what would be making an ascending triangle, which would be confirmed, most importantly, with any sort of a closure above the daily range highs, which is about 22,500 or so. If that does happen, there is an implied target here, which would be pointed all the way up towards $26,500. That is not to say that it's 100% destined to kind of reach that region. I would actually be looking for first a quick little stop somewhere around about 24,400, and then I guess somewhere around there would be reasonable. And it is also having good confluence with a 1.618 Fibonacci extension, which is another good sign for that. Again, this is all not validated just yet, just potential in here in the charts, and we're going to find many other things, many other sort of veins to kind of corroborate this story. But that is completely contingent upon a daily closure, or at least a 12-hour closure, a higher term time frame closure above 22,500, depending upon what time frame that you're using. And obviously, this gets nuked nuked, meaning that it no longer has a structure if Bitcoin does lose that last daily low, or even really anywhere below, I would say at this point, like basically $20,000, a little bit below $20,000 to be fair. All right, cool. So keep that number in mind right there. And let's go through a couple other things first before we get into the fun stuff. And a couple other things that I wanted to point out are happening as soon as today. As soon as today at 7 p.m. Eastern time, we will get the weekly closure. The weekly will have a chance to actually cross the upside. It's looking pretty likely right now, pretty fucking likely, I would say. Any sort of a closure today above 20,150, and then yes, we will see the weekly stochastic momentum turn to the upside for the first time basically since February, which February was a pretty nice bounce over here. It ultimately did fail, of course, but this bounce, don't let it fool you, was a 41% move right there. Not bad, coming in from even a higher level than what we're at right now, which is not actually a sign of strength, just for what it's worth, but ultimately, I do look at that as a good indication that we're probably ready to have a bit of a bounce here. As everyone, I wouldn't say everyone, it's like when I go through Twitter, it's like now everyone's fucking bullish, before everyone was fucking bearish. At the end of the day, we're just stuck in our own echo chambers. But if we do compare this stochastic level with several in the past, we have seen some pretty nice lows come from this region, albeit not always like macro lows. But the last time that we saw actually this region tested was back on over here in March of 2019. In fact, I'm going to mark this one off just so that we can compare them nice and visually. There you go. Oh, Jesus, man, I have way too many of them. Basically, these last 2 months right here is what I'm speaking about. And that would correlate, yes, with the February 2019 lows, even in October 2019 as well. This one was a failed bounce. I should denote, but that was a 45% bounce nonetheless. Then, of course, we have a couple of times in 2014 and 2015. One of them, again, a failed bounce, but that was 69.5% move to the upside. And the next one was the actual low. About 90.5% was done in the next 21 days. And, that was like quite literally the macro low, but still things took about, almost 10 months to really get going again. And then we have the last iteration, which was way back on over here in November 2011. This was yet again another macro low. So I did think that was rather interesting. Bitcoin's going to have a chance to do that again today at 7 p.m. Eastern time, any sort of a closure of 20,150, just kind of adding on to the likelihood of a bounce first before, continuation lower, if there is going to be continuation lower. I do think that there is a bit of a case to be made for the macro low being here. I personally think it's unlikely, but, that's my opinion does not get in the way of statistics and probabilities at the end of the day. So when we go over to the next slide over here, or let me just make sure that I'm actually going through this properly. Yep, here we go. I want to talk about this chart yet again. This is the BBWP, so volatility versus stochastic momentum reversion chart. And basically what we've seen is we've seen the 5-day BBWP, so BBWP measures volatility, which is the dispersion of returns, turning down above a critical level, which I define as 80 percentile. And when I say turning down, I mean having both a negative slope and below the moving average right here, so basically like literally right there, then that constitutes a mean reversion play. And to give you an example of actually the last one that happened, so that you can have a full example of it, we can go back to June 30th actually, where again, the same sort of conditions were made below the moving average right here, boom. And then as you can see, price action came down about 21% as the 5-day stochastic was actually also angled down as well. For another example, this one, well, should we talk about that one? I mean, we talk about any one of them really, but here would be another good example right here. This was coming in from July 2019, of course, and July 2019, this mean reversion play actually, I mean, basically to call it the top in this case, not always going to do something like that. But again, about a 32% move to the downside. And you can see that the 5-day stochastic momentum oscillator got the correct direction in this case. So what I've done is I've done that for all of the past iterations. There are priorly 11 of them. And what we have found is that the average reversion play produced about a 54% move to the upside, or just under 54% move to the upside. And the stochastic momentum oscillator has gone the correct direction on that play 10 out of 11 times, which is basically 91%. So in this case, the 5-day stochastic momentum oscillator will have upside posturing, giving it a higher probability to play out this mean reversion play to the upside, as long as Bitcoin is closing above 19,600. I would even go as far to say that is kind of like the line in the sand right now for the higher term timeframes, not to be confused with the lower term timeframes, which I have pivoted at like 20,400 or something like that. This would be relevant for the higher term timeframes. Bula hoping is completely nuked below there is what I'm essentially saying with, big moves down yet again. But in this case right here, more likely to move to the upside than the downside. There is some decent variance actually in these reversion plays, I should add. We have seen as great as 100% moves. We have seen as low as 21% moves, but we have seen the majority of them actually coming in kind of in the middle of there. Obviously the average is 54%, but if we do get rid of the extremes, it's more around like 35% to 40%. So let's play around the numbers here to just kind of get an idea of, what's reasonable, right? So on the lower end, we've actually already played off this move, obviously. I mean, this was already a 20% move right here, 21% move. 30% move puts you at about 23,400 or 23,500 or so. A 40% move puts you at about 25,000 bucks, which I think is rather interesting. And if we do go for the full on 54% move or so, where would that put Bitcoin? Well, basically around 27,000 bucks, or let me actually do this properly. I don't think I got it all the way down there. There we go. Okay, there we go. Oh, what do you fucking know? $26,500. $26,500 on about, just over 50% move right there, which again isn't average. So there's going to be some variance here. Is very much consistent with what we see over here on the measured move from the ascending triangle and also the 1.618 Fibonacci extension. Okay, that is interesting, or at least I think it's interesting. But we can actually take this one step further if we go to this chart over here. Completely different indicator. This is the weekly PMARP historical reversion chart. And basically what I've done is or I should actually show you the settings first. Basically the settings are 20 VWMA, look back 100, those are the important ones in this case. Anyways, in this case, what I've done is I've essentially highlighted anytime that we've seen the PMARP indicator get below like basically 2 percentile in this case. And I found that of the, how many iterations? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 iterations, and 12 really have only activated thus far. There has been an average bounce from those regions of about 59%. And I've also analyzed the amount of days that it typically takes as well on average to reach the next major high from that reversion play, which was just over 53 days in this case. So again, we already kind of know that 59% from the current lows puts you around like, I'm gonna guess like maybe the upper end of 26 or 20, basically 27, which I do think is not very likely. I don't think that Bitcoin's, I don't think that Bitcoin's going above 30,000 bucks anytime soon, or really even that close to it. Just personal opinion, but on a closing basis, that is on a closing basis. Fuck, I'd even be surprised to see it go on a closing basis to like 27,000 bucks. But in this case right here, we can get another sort of completely unrelated indicator to show yet another, another general, reasonably close target to what we've kind of been looking at earlier. So I thought that was also very, very interesting in this case. So in this case, this would also suggest that, that would be what, like 53 days is what, like 2 months, a little bit less than 2 months. So starting from the 13th of June, which is where we have the current low, where that put us out around, let me try to get as close as possible. That put us, actually early August. So late July, early August. So I do still kind of like that sort of a time zone for this move, if it is going to happen at all. Again, much more contingent upon the actual break of the daily range highs. Can we take this one step further? I think that we can, but do I want to bore you with this is the real question. Let's see. I don't think that we need to, I don't think that we need to bore you with the next portion of that. I think you probably get the point. We're already 13 minutes into this one. So let's actually go over here now. I wanted to talk about this indicator. This is an indicator that I used to hammer on quite a fair bit in the past. This is the hash ribbons indicator. It's the old blue buy signal, which I think it just turned into a fucking meme, which I absolutely hate. Unfortunately, like with anything that actually works, it can just be distorted basically. Anyways, I wanted to bring it back here simply because my good friend, Mr. Gritters, awared me that there is a nice statistical analysis to be done on the capitulation to buy signal phases. So to give you the 5-second explanation, basically what this indicator does, it tells you when miners are capitulating, based off of what the programming is. And then the key component is the actual buy signal that happens afterwards, similar to what you see on over here. So the capitulation signal essentially starts like right before that last major dumbola from basically 60,000 to 30,000. You get the buy signal on the first higher low coming out of that, which was of course August of last year, before Bitcoin marches on to new all-time highs. So what I've done is I've gone through and I've measured the amount of time that it takes to go from capitulation to next buy signal. And I found that if we measure all of them, like literally all of them throughout the annals of history, of which I think there's like 17 or something like that, that takes about 56 days on average. If we just measure like the last few years, it's a little bit less than that, about 43 and a half days. The reason why I'm calling this out is because 43 and a half days would put it, I'm just going to estimate 44 days. That would put us at the 22nd of July, which is 5 days away from now. So we're currently on the 17th. So if Bitcoin does produce a blue buy signal right there, that would be another good indication that, the next major move is very, very likely to the upside. Again, I'm not calling it macro low, although this has, called several macro lows in the past, in fact. But if we do take the upper end of that, we could be waiting as long as 56 days on average as well. So that would put us, probably around like end of August, I'm guessing, or sorry, middle of August in this case. Until then, just kind of an interesting timing factor right there. The blue buy signal has marked off typically some pretty major and all of the macro lows before as well, actually. So it's not a bottoming signal fully, but it is a good signal that, some major lows are probably in, and Bitcoin probably tries some upside moves from here. Anyways, okay, moving on now. What else do I want to get to? So I think also, or should we even follow up on the Joule? I mean, the Joule signal like fired off like ages ago now. It's not even relevant. actually, it's kind of getting another one right here, but I'm talking about this one that happened earlier on in July. In hindsight, looking pretty damn good. Obviously, we also did get the phantom bullish divergence on CME confirmed. We called that one out yesterday. That targeted region up to about the 21 there, which is actually kind of where we're at right now at about 21.6, 21.7 region. So ultimately, probably does open up on a little bit of a pullback, but that's not really the focus of today's video. All right, so is there anything else that I want to get into before we get into the other fun stuff? Yeah, let's get into the other fun stuff actually. So, or maybe we just briefly go over this, in fact. Okay, so here's Tether dominance. If Bitcoin is going to be putting in a major low, we do expect Tether dominance to be putting in a major high. And it is putting in a high right here, yes, and I do think that is going to work its way down. I do still think that there's maybe a threat of one more move to the upside overall, as we have not seen the full intended target of this one play out. Although maybe I did not do this one properly, so let me actually just try it right now. Let's see, is this good? Yeah, that actually should be about right. So yeah, so fair enough. Sometimes these do get front run, but a lot of the times they do, more often than not, they do get hit. And this would be a differential from about 9.5% all the way up to almost about 1080 in this case. So that is significant, I would say. Anyways, next move very likely is down. Going to be bounced along the way, of course, on this, which does play opposite of Bitcoin, which I probably should have explained earlier, which is why I'm bringing this up at all. But basically, Tether dominance does seem to have an inversely correlated relationship with Bitcoin, of course. And so if this is going to likely come down, Bitcoin likely goes up, blah, 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 blah. I do expect this next 5 to 10 day session to come down somewhere around like 635 to 640 or so, which is kind of significant right there. Likely does give Bitcoin the impetus for another little move to the upside. But overall, I wouldn't necessarily call this one done just yet, not until at least it goes back down below about 5 spot 10 or 510 in this case. Until then, there's still higher lows, and there does still exist that threat of a move higher, especially when you look at the monthly right here. Wouldn't necessarily say that I'd call that one a top just yet. So it does make me really consider the possibility that we have not seen the macro low one on Bitcoin just yet. This thing could take a long time to play out with a summer rally into, maybe one more test of the lows, or maybe slightly lower lows, something like that. But when I go over here and reference this chart, or actually, should we shore up the bottom again? Here's the pi cycle indicator. You already fucking know it. Pi cycle indicator called a low yet again, and there you go. I mean, that's actually been pretty damn good in the history of Bitcoin. Hasn't been perfect. The last pi cycle high did call the high on the April 2021, I should say, 60,000 test right on over here. Obviously, Bitcoin did trade higher than that later on in the year, about 15% higher with a new all-time high. But in terms of like just an actual price level, pretty fucking close in this case. As far as the lows goes, it's been pretty damn good as well, but it just doesn't really have too many iterations to have been tested. So that my issue with that is that realistically 3 times makes a trend, and we're potentially on the 3rd time right here, calling the pi cycle low. The past 2 times have been pretty damn good, but it should be known that one of those 2 times was perfect. That was 2018. This one literally called the low on the low, if we go down here to the daily. But in 2014, 2015, it did call the low, technically speaking, 2 days before the actual low itself. And while it doesn't look like much right here, it is because that was like a 37 to 38% move to the downside after that low was called on the daily. So just saying, perhaps consideration. But if we do go reference the weekly, then yes, it is actually perfect. And by the way, the weekly will be closing today at 7 p.m. Eastern time. So I think that might kind of help out the Bula case here for maybe a macro low. Definitely possible. The reason why I continue to hold off on calling any sort of a macro low is simply due to this chart over here. Now, this chart is the fundamental chart of which I reference the accumulation distribution indicator on the monthly specifically. And this one has been perfect, it's basically been perfect in calling the macro lows all throughout the full history of Bitcoin. And what I mean by this, or what I'm looking at right here, is this green horizontal line that my cursor is currently on. Anytime that this indicator has come down to those levels, that has marked off a macro low, as you can measure out all the way on over here. Again, throughout the history of time. The reason why it's relevant is because right now, we're not really that close to it. Could it be, however, that this continues lower like that, while price action grinds generally sideways and maybe even a little bit of up? Yeah, that is actually possible. That definitely can happen. But until we actually see that happening, I can't guess on that. That's not real analysis. It's not very helpful, but that could be a potential way that, a low does get confirmed here. Until then though, we've never seen a low without getting to that level minimum ever on a macro scale. So that does make me consider that the macro low is not necessarily in. And what I've also done is I've also measured out all of the average corrections over the history of Bitcoin and I've measured out the corrections from when the indicator turns red. So for example, right here where my cursor is currently on, to the next macro low. And on average, that has been a 61.34% move to the downside. If we take that from the time when this indicator turned red on this current drive to the downside, then that would forecast somewhere around $15,500, which is pretty fucking close, to where Bitcoin has put in a low thus far at 17.5. But this is an average. There's going to be some that are above, some that are below. I would say that it puts us in the ballpark, actually. So it is reasonable. It is reasonable. What makes me the most concerned about anything when calling a macro low on Bitcoin, however, is it really comes down to this chart over here. Here is SPX. I know I keep on coming back to this one, but it just won't go away. And basically it's this chart. And this is the full history of the SPX for all recorded time that we have, I believe, going all the way back to 1871. And with Bitcoin correlated to traditional markets, so, the correlation is mostly due to, or I would imagine due to the liquidity bubble that the Fed kind of, put us all in, which is nice, kicking the can down the road from the old Rona times. Didn't have to deal with it 2 years ago, but now we have to deal with it, and probably a little bit worse as well. I do think that this chart is rather sobering, because if the relationship does continue, it would be very reasonable to expect that this is nowhere near done, and we very likely see much lower. When I say much lower, it would be reasonable to assume somewhere down around the actual Rona lows, which, by the way, I know it doesn't feel like it, even with the last 6 months being straight down, but that's not a 66% move. But from where we're at right now, that would be another 40% move to the downside almost. The current area where S&P is at versus the March 2020 lows is 66% a difference from each other. So that'd be almost a 40% drop from current price. Anyways, in this case, if something like that does play out, it would be unreasonable for me to say that Bitcoin breaks the relationship before it breaks the relationship. That's just the way that I operate. Some other people who are more, visionaries, they'll say, hey, this relationship is going to end now because of X, Y, and Z. I will not do that because that's just not my style as a trader, nor do I even trade timeframes like this. Anyways, I just look at this because it's interesting and good practice. And well, there's a lot of interesting things with this chart. First and foremost, we have bearish divergence on the 6-month chart. That's fucking great, right? You don't really see bearish divergence on a chart like this too often. The times that you do are throughout all of the full-on bear market corrections throughout the 200-year history, or close to 200-year history of this. Am I doing that right? No, it's 150 years, whatever the fuck. Anyways, what else do we have? We have the 6-month jewel turning down. That's fucking great. And then we also have, or we confirmed, not we, S&P confirmed, a 6-month bearish engulfing dildo coming into end of June. That's only happened 2 other times in history. Do you want to know the other 200? Do you want to know the other 2 times? Well, one of the times was right here. This was at the start of the 70s, so 1973 bear market. We traded above, closed below. Yep. Okay. So there you go. And let me just see. People always say like the 80s were bad. Look, the 80s were straight fucking up. Like, look at the goddamn charts. Okay, the 70s were the last bear market. All right, just talking. I'm obviously like talking to myself, but I keep on seeing this comment come up like, Krown, don't you think that the 80s were a bear market? Okay, who was fucking tested in the 80s? It's just straight up. It's just straight fucking up. Okay, this corrected all the way down to the 55. And then also the only other time that we've seen a bearish engulfing dildo was in July of 1929, the start of the Great Depression, right here. And this one like came even below the lows of like 1903, which is kind of insane. So didn't just test the 55, but shattered it. Anyways, anytime that we have seen also bearish evidence on the 6-month chart, we actually have seen a test down to not just the 21, but the 55. The 21 right here is going to be crawling its way up to about 3,100, probably on the next closure or two. And the 55 would basically be in alignment with the COVID lows, actually. So I think that that's just a consideration. Again, if the relationship doesn't have to continue, but if it does, that is, I think that's very much relevant to know. That also coincide with the fundamental chart over here, or this fundamental. Where's the damn fundamental chart? Here it is. Here's the fundamental chart. So I do think that is relevant to bring up, and I'll continue to bring it up until proven otherwise. That's kind of the way that I operate with these sort of things, for better or worse. Anyways, I think that's a good place for me to leave off on this video. I want to be wishing you well. I want to be wishing the best, and the happiest on this nice little Saturday, Friday, Sunday morning. I've got a Bybit shill as well in the description there that I forgot to talk about. Blah, blah, blah. You already know the deal with that one. So cool. I'm going to be signing off now. Take care. Much love, and see you hopefully soon.